Yep. 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 Yeah, yeah, yeah. I mean, each. Gotcha. Yep. Yep. Gotcha. Yeah, so let me just zoom out so we can get a little bit better understanding of what everything looked like yesterday. So this was, yeah, this is the 1 hour chart. So uh, a, a couple important things to look at here in terms of overall context. So we're still up on the much higher time frame. Everything still looks up. But if we come down a little bit, okay, let's zoom in. One important thing to note here is look at these highs up here and this high over here. So slightly lower highs being created. So we went and retested the all-time high over here on the left and it rejected away from it and it created a lower high. So that's showing us that the sellers have been a little bit more dominant. And then we've been in like a smaller time frame downtrend right here. Um, More recently. So even before this horizontal line, this red line, that's the open from yesterday. But even if we take out everything to the right down here, it was still headed down slightly. And it turned away from the all time high. A lot of times, if you can reach the all time high again, it should break above it again and continue. Um, but it didn't, and it's starting to turn away. So, a couple important levels to look out for is this level here and also this level if you look at the higher time frame. So if we go up and look at the daily chart, let me get rid of all this mess here. Yeah, 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 yeah. So right there. So if you look on the daily chart, the bottom level is um an extreme wick area where you had a big reaction back up and strong buyers step back in. And it one thing that you have to consider a lot of times as well when you're looking at the higher time frame is where can you see a range begin to form. So if price comes back down into this lower level, could we see price do something like this and start to range like this before we either break to the upside or we break down from there. So it could do something like that potentially. So this could be a range extreme um, for support where we can keep getting bounces. But it's an important level because it has a daily level. And then if you go down onto the 4 hour, it's that same strong wick. And then it also has confluence of other reactions at the same area when you look to the left. And then the other level, the higher one that you said you had, that's also an important level on the daily and this 4 hour level. Um, so in the past few days, it's been a little bit mixed. So to go more in depth on that context of the market, so higher time frame is bullish, and the really small time frame was like neutral bearish. It started to trickle down in the past few days, and the intermediate, which is, you could consider this pretty much to be the intermediate time frame, it's started to turn more neutral, where it's starting, you can see the sideways action like this starting to form. So when we have mixed time frames, you have to be a little bit more flexible on direction. So when we're over here on the left and it all looks like this, all the time frames are going in the same direction. So we have the much higher time frame, the intermediate, and the smaller time frame are all in the same direction. So we should only really be trying to trade in that direction, which is long. But now that the time frames are starting to change up a little bit, we have to be flexible with shorts or longs. So it can all change up. So, okay. So this was the major area that we had right here. And then let me go down onto a 5-minute chart. Actually, let's go back up quick. Okay, so this area here, let me highlight this box with the red lines. Okay, so this box here is a very important level for the direction of the chart. So if you look, this is a high volume node over here. You had basing, and price sat in this area for a really long time. And then it came down, rejected out of that area. This was the news that broke price down past that level. But when we came up again, it just missed the level, rejected, held up at the level. Look how many touches you have into this level. So this is a really strong area of support and resistance. So, and again here, we break the level, pull back up, and reject down. So this is the open where this horizontal line is. But a few hours before the open in the overnight session, it had already broken down through the level, pulled back, and rejected. And this is a major area. So it's showing us that the sellers have been more active in the overnight session. So you could, I wouldn't say predict necessarily, because you can never predict anything with a high certainty in trading, but you could have an idea that price would continue going short because the sellers already stepped into the market. We broke a bigger level, so we could continue to see price go short. So with that idea, you could have taken a couple trades here. So this was 9:30. So this candle is the open. We see price shoot up, get really close to that higher time frame big level. It just missed it, and price starts to shoot down aggressively. So if we get really close to a strong level, it doesn't touch it, and we still see a strong reaction, that tells us that the sellers are really strong. They're really in control because it didn't even make it into the area it should have. This is just a 5-minute. Yeah. Yep. Correct. So, yep, 9:30 we shoot up for 5 minutes, and then it rejects away super hard. And this was a level of support that I had as well. So from 5,003 to 4,994. And so level of support, and it gets broken within 10 minutes. Super strong to the downside. And then, so if we're breaking this level of support this quickly, it's showing that it has momentum. Look how big the candle is. It's pushing through the level, broke it fast. So what you could take, this is a little bit more difficult of a trade. And this uses the Fibonacci retracement tool, is if you draw from the top to the bottom of this first move here. So we've had a straight move down from here all the way into this green wick here. So I can show you on the 1 minute, might be easier. So from here, it's gone all the way down, hits the next level, but we've had momentum, super strong sellers all through here. So what you could do is take a pullback trade. So price pulls back up into the 38% and then it goes short again. So the way that you would take this trade is you just have a limit order right here. And this was the one that my brother took. And then your stop loss placement would be slightly above this area at 61.8. So you would put it at around like 62% or slightly above. It would be something like this. The reasoning for the stop to be there and not above the whole thing, not all the way up here, is if this is as strong as it looks and you have sellers stepping in this hard, price shouldn't retrace past the 61.8%. It shouldn't come all the way back up because that means the sellers aren't that strong anymore. So this trade, even though it was a good entry location, it didn't keep going. It actually lost its momentum and it slowed down a bunch. So if I draw up this tool, so entry here, stop loss would be here. If you got out at the very, very low, it was just about 2R, but that's almost impossible to get out all the way down there. So it's more like a 1.5R type trade. But your ideal target would have been shooting for the next level, which was down here, which some days it could do. You never know how much momentum it has. If it has a bunch of momentum, it could always continue all the way down into the next level. So it just happens that it wasn't able to do that today. And then if you didn't catch that first trade, you could have waited for the second trade here. So oftentimes, where am I? Okay. Oftentimes when you get support broken, it can turn into resistance. So this was my support level that I had drawn. This is a 15-minute time frame. So this was the support I had drawn up. And then we had price break through the level, hit the next level, but it pulls back into the previous support, which is now resistance. And then it continues down into the next level. So you could have had a short at this area, or you could have shorted in here. Or when you shorted the first one, you could have just left your stop loss above, and you would have had price pull back on you and then continue short. So it's all preference on whoever the trader is. So I know some people, they added on at this second area. So what they did is they entered at the first one, they scaled out in here most of the position, and then added back on when price came back up, and then got out at the next level. So yeah, it's just different options. Sorry, what was that? No, I would have just had a limit order placed. So yeah, a limit order just like at the beginning of the zone, and then your stop up here or above the zone, whatever you prefer, and the target is the next zone. So it looks something like this. And then the and then the last trade, which was the one you saw in the Discord yesterday, is just a long from this level. So again, this is just a resting limit order from that's the entry, and then the stop usually goes between like 2 ticks to 4 ticks, so like half a point to a full point below the zone. Because if you don't give it enough space, sometimes it stops you out and then continues. So you want to give it like a little bit more space, and then went all the way up. But even though this says like around 3R, you don't always get that based on your trading style. So for me, I'm not going to be able to hold the trade that long through all those pullbacks. So it'll be a scale out here. So you get a reaction, you scale out, it pulls back again, you can scale out again, and then you take the full position. So the oh, okay, yeah. So uh, different traders. Okay, so the way it works is I get in here. Let's say I have one lot on the trade. Yeah. So like one standard, or one contract, whatever it is. Um, you're trading futures, right? Okay. For futures contracts, I'll say you have 10. So you have 10 minis or micros right here when I get in, and then when it gets to 1R, so when I'm up one of my risk amounts. So for here, I'm risking 7 points. So when I'm up 7 points on the trade, what some people like to do, which I like to do, is I'll take off some of my contracts. So I'll take profit on some of them. So uh, if you do half, for me, it's taking away too much reward potential. So if the trade keeps going, then you don't end up making much because you only have half left on. So what I do is I do 25% at 1R. So and the good thing about 25% at 1R is um so once I hit 1R, I'm up now a quarter R, but now I'm risking 25% less on my trade. So it actually reduces my risk by 50% if I don't move my stop. Because I make 25% and now I'm not risking that 25%. So that saves me 50%. So I can leave my stop full and then I'm risking half. Or sometimes, depending on how the move looks, I'll just move my stop to break even and be even on the trade. And then if it comes back and stops me, it stops me. And then depending on how the chart looks, how it's moving, you can always scale again another 25% or half, depending on how far, and then take it at the last target area. Take the whole trade off. Correct. Yeah. But that's something that you need to find for yourself in terms of how much you want to scale out. So I would just try different things. I do have. Ooh, let me see if I can find it. I have a sheet somewhere that has all of the scale out percentages. Because if you scale out too much too soon, then you ruin your risk to reward potential, and then you don't make anything on your trades, and then you just keep losing and losing, and then your winners don't turn into anything. So you need to be careful about scaling too much. So some traders just hold on to the whole thing and will be fine holding the whole thing. For me, I can't do that. I can't wait hours and hours and hours and not take anything off the trade. Um, yeah. Um, I think I have a sheet here. Okay, here it is. Let me. Well, I'm actually not doing the futures contracts right now. I might switch. I'm doing it's called a CFD. So it's more like trading forex style, but I trade either 1 or 2% trades. So it's all percentage based. So I don't even look at the amount of contracts. I just trade the percentage and that's it. Um, so this sheet, you can see this, right? The Google Sheets. Okay. Uh, so at the bottom, it says 3R, 4R, 5R, 6R. So this is what your main target is. So when I set up the trade to get in the limit order, if I'm looking for 3R, this is the one that I click on at the bottom. And then um, it's a little bit confusing, but you'll get the hang of it. So this is more conservative scaling, where I'm scaling more out of the trade earlier. And then as you scroll down, this is more aggressive scaling, where I'm scaling less out of the trade. So when I enter the trade, I'm not scaling anything because I just entered. When I hit 1R on the trade, so that's 7 points that I was risking, if I make 7 points, if I scale out 30%, that means that I've made 0.3R on the trade so far, and I only have 70% of my initial size remaining running on the trade. And then this is at 2R. If I scale another 30%, then I'll be up 0.42R, like an additional 0.42R. And then if I hit my final 3R target and I take all of it out, I'll make 1.47 out of it. So at the end, I'm left with 2.19R. So instead of 3. Yep. And then these are just all different options. So this is scaling 25% instead of 30 at 1R. And now I'm left with slightly more. And then if you keep going, left with slightly more and then slightly more. And then it keeps going all the way down. So yeah, it's all based on how you want to trade, basically. And then depending on what your overall target is, you can see. So if you're shooting for 4R, then you have the same options again. And then all the way up to 6 if that's the type of trader you are. So I can share this to you after so that you can see which ones suit you and yeah, what you would like to do. Um, okay. Yeah. Yeah. On this ES, sometimes that takes a long time. So yeah, it could be very long time. The NQ can do it a lot quicker, but it's a little more choppy. Yeah, it's not always easy to take the trades when you see things like screaming down against you, but it's all about the probability. So you just have to have trust and probability in your levels, and then some will work, some won't. The hard part is letting the probability play out, where you need to let your winners play out long enough to make you the money back that you've lost on previous trades that haven't worked. Because if you cut them too short, then you're gonna end up break even. Um, okay, so yes, so 3 trading ideas on this day. You had that mini pullback to the 38%, the pullback into the level, and then the long from here. Um, no, it's bottom to top if it's going long. Um, yeah, and then the Fibonacci retracement, it can work on multiple time frames. So like you can look at it for something like this. You have this really big move up here. So if I'm looking at the chart, like, let me see, like this. So strong move up in one direction, and I drew it from bottom to the top. Price pulled back and came pretty much right into the 38%. But it was already in this level that we had. So there's 2 reasons why you could take a long from here. You're at a strong level of support and resistance. It's like a bull bear type zone, and you're at a 38% retracement. So the idea is if, let's see where we are on the chart. So now price is broken below this 62% area of this move up. So I won't say that it can't go long from here, but this move is becoming invalidated because the sellers have stepped in so strong and it's breaking below this important area at 62%. So if the buyers are really that strong, it should have never even broken this zone here. Yeah, correct. And then, yeah, it should have done something, comes down and then comes back and then makes its way all the way back up until it breaks the new highs. But now it's looking more and more bearish. Um, okay. Now let me talk about something that's on here. So oh, yeah. Mm. Yeah. Hmm. Yeah. Awesome. Um, th- did you get everything from last time well enough? All these four things that we went over before? Okay, perfect. Awesome. But the trends make sense. Higher time frame, intermediate time frame, momentum, all those things too. Good. Okay, awesome. Perfect. Um, so I'm gonna skip this section here. We'll come back to this. Um, but I'll jump to this one, scenarios. So this is one of the most important things out of all of it, and this is what's really helped me uh, plan everything out. So I'm back on the 5 minute, and I'm gonna look at yesterday again. Let me. Okay, so this is just yesterday. So this red box here, this was that higher time frame area that was really important. If price stayed below, then the sellers were more in control. So if price comes into that level, we would probably want to take a short at this level. So it would look like, oh, wrong one. I'd have, sorry? Yeah. So we'd want to have a limit order short here. So that's one scenario that I've made. So the way I draw it up on my chart every single morning before the morning starts is I come up here to TradingView. There's a tool. Um, this is my favorites bar. You know how to favorite tools on TradingView? Okay. Uh, I'm not sure which one it is on the left. I'm sure I could find it. Oh, it's in here. So it's under the brushes area. Oh, here. Shapes. It's called path. Yeah. So, sorry? Yeah. Yeah. And then I have my bar of all the tools that I use all the time up at the top, just so I don't have to have this toolbar open. I always close the drawings panel, because I don't use all the rest of it. It's just more clutter. But so I have the path up here. So actually, let me get rid of this whole thing. Okay. So the open of this day is where the horizontal line is. So the open hasn't happened yet. So what I do is I draw out all the scenarios. So if price comes up into this higher time frame area, I'm going to want to go short. And I'm going to try and take the short into this next area over here, into the next support area, because this one's been taken up mostly. So if you see price has gone through this whole level of support already, bounced. So we can presume that most of the orders are probably gone from here. We may get a small reaction when price comes back down, but my main target's going to be lower into the next area. So this is one scenario for the morning. So it's one idea of what I think can happen. Um, So you're going to want to score each of these ideas. So the scoring criteria that we did before, so the higher time frame, intermediate time frame, location, momentum, you're going to want to put a score on this type of trade. So for me, this is more of a tradable reaction trade where I'm trading from a level and my location is really good and our smaller time frame trend is down. So our intermediate is still like neutral ish. So in terms of that, it doesn't really count. And the higher time frame doesn't really count, and we don't have momentum in the market. So, but the location is a really strong area to take a trade from. So if you count the really low time frame trend, it could be a 2 out of 4 or it's a 1 out of 4 trade as a tradable reaction. And then what happens if this level breaks? So we said before that this is a really strong level, and if the sellers are below, that means they're more in control. But if price opens and breaks above the level, then we have to have a plan too. So the plan is, since this is such a strong area, I'm going to wait for price to break the level, pull back into it, and then go long from it and take price up into, I'm not sure what levels are here. This could be a strong area. If not this, it could come all the way back up and retest these highs over here. So you have to have both ideas ready. So now you have to score this trading idea. So if I'm going to take a long from here, so do we have momentum in the market? You would if price breaks the level, because you're breaking a major support resistance area. So that means that you have momentum. We're going long, and what's the higher time frame trend? It's up. And then the intermediate again is like neutral-ish. It's not super strong up. So I don't know if I'd give it a point for that. You could, you couldn't. It's kind of close. And then location. It's a good location because it's a strong support resistance area. So that would be a 3 out of 4 or 4 out of 4 trade. So this is one that you wouldn't want to miss out on if it starts to show strength up. Okay, so that's one idea. 2 ideas, so 2 scenarios. And then again, let's keep going. So if price comes down, breaks the level, pulls back into here, could you go short again? Potentially you could, yes. And then our target would be this next area. And then when you zoom out, you have to see all the levels. So another scenario is, could you go long from this level? So could we see price come down, hit this level, and go long up into here? That could happen. And then also, could price come down into this next level and go long? Again, that could happen. So now you need to score all of these ideas, and then you choose which ones that you want to take. And then you delete the ones that you're not going to take. And then you have to be accountable to take those trades when they happen. So if you draw up the scenario for it, and before the open you say you're going to take the trade there, then take the trade. Just be accountable to take it at that spot every single time if that's your plan before the morning starts. Yep. So the only time when I'm not using a limit order is when there's some good momentum in the market. So my market orders are like breakout trades, or when you get like a really big push right at the open. That usually happens with a breakout. But everything else, what I'm doing is just limit orders. So what I used to do is I used to wait for confirmation out of every single level. But I would find that I miss the trade, or I'm in it at a worse location, and then I give up some of my R potential. Or what I would do is I would do something like this. Let's say I'm going long at this gray area. I would see this candle on the 5 minute, this green candle. It comes into my zone, rejects away. And then what I do is I go long here and I put my stop below the pivot down here. And then it stops me out. But then it keeps going up after. And instead of doing that, you could just get in at the level on a limit order and put your stop down here. And that's a 1R losing trade. And this is to the high. It's just above 1R. But this isn't a wrong trade to take a long from this level. It's not incorrect to take it long from here because it could potentially continue up. But the sign was this is so strong. It didn't even hit this very strong higher time frame level of resistance, and it's rejecting away really strong. So this close long might not work. It might have to wait for another higher time frame level of support. But at least on this trade with the entry with the limit order, at least you had time to get out of the trade. It worked for over 1R. You can always close it early or move your stop to break even to reduce the risk or something like that so that you don't lose 1R on this trade. But yeah, the limit orders for me have been better. The confirmation I would always jump into late, and then you ruin your target because you're too close to your target now, or your stop you put too tight and you get stopped out. It was frustrating. But the back testing helps a lot with that, I'd say, because then you can start to see which one of your levels work consistently, and then you can build confidence in your zones to be able to put limit orders on them. Yeah. So with the back testing, when you set it up, so let's go back. Let me go on the 1 hour chart, and then we'll just go back here, replay. Okay. So when you set up all your levels, so let's say you have a level here. Oh, let me level through there, and then you have a level at the very high, and then there's another level here-ish. Oh, if you go to the edge of the box and you hold Control on the keyboard, and then you left click, hold, and drag, then you get a new box. Yeah, it's much quicker to do that. Yeah. And then we have another level down here. Let me delete this big box. I'm sure there's more, but the idea is that you draw up all the levels, and then you want to create scenarios. Again, before even when you're doing the back testing, you want to have scenarios ready. So, if price comes up into this one, am I going to short? Yes. Okay. Then place the order here to go short, or you can't on the back testing, but you can market order when it gets up there as you're playing it, but have that scenario drawn out and score all of them. And then again, if this comes up, breaks the level, pulls back into it, comes up to this one, then you can short from there. So this one you could long if it breaks it, and then short when it gets up to the next one, and then short when it gets up to the next one. And then if it breaks this high, then you wait for it to pull back and go long again. So that'd be like this. And then the same thing down here. Long from here, and then pull back and go short from the same spot again. Um, yeah, so just have all of those drawn up and ready to go, and then just play it and just see how it works out. And then you can see how the levels work. So it hit my level there and went up to the next level. Broke this level, pulled back. Let's see if it holds. Yep. You see that? It held. You see how this level held? This was tricky where it broke and then pulled all the way back in, but you would have been in the long from down here at this level. And then it broke it, pulled back into level, and then it went long into next level where it went short. Yep. Which was this scenario right here. This was wait for it to break, pulls back, goes long, and then you take a short from the next one. Um, so yeah, you just get some time in doing that with the back testing, and it'll help a lot to give confidence at the levels. And yeah, I would go much slower than how fast I was going. That was like way too quick. But yeah, it was super fast. But I would draw the levels on the higher time frame, so daily, 4 hour, 1 hour, and then you can watch it on something like the 15 minute or the 5 minute or whatever you're comfortable with. But you only trade the morning session, correct? Yeah, gotcha. Yeah, yeah, yeah. I mean, that's fine if you don't trade the afternoon session. It has been a little bit tricky recently. I'd say start of the year, lots of things were moving in the early session, the morning session, but past couple weeks it's been pretty slow during like the early morning session, and then it's been moving at like 12, 1, 2 sort of time. I'm not there all the time to trade either in the afternoon session. The earlier hours are much better for me. Uh, but the reason I was asking you is for the back testing because you don't necessarily want to be trading at like outside the market hour times um, where you're normally going to be trading. So it's okay to do at the start and just get used to all the levels, drawing everything, see how they work. But over time, you're going to want to get a little more specific with it and say, okay, I'm trading between 9:30 and 12:30, something like that, and only take the trades on the back testing during those hours. Because if you're trading in the overnight session, sometimes the levels don't work as well during the overnight session, or there's lower volume in the overnight session usually. Uh, so it's just something that you have to watch out for because the time that really matters when you're back testing is the time you're actually trading because all the rest of it you're not even trading anyway. Um, and then also, do you know all the news websites for looking up like the economic calendar and everything? Yeah. Yeah, Forex Factory. It's nice and simple. I have it here. Forex Factory. And then there's another one called Trading Economics. Economics. And then if you go calendar, click on the calendar at the top. It has more news events that sometimes Forex Factory doesn't have. So Forex Factory has like a lot less than this. This has so many different things, and sometimes you'll get news that happens that's only on here and you can't see on Forex Factory, and it'll cause a big move in the market. But generally, Forex Factory is fine to look at. Um, oh yeah, Yep. That's a little tricky sometimes when they do that. Um, Another good website to use is for random news like that is called Forex Live, and I believe yeah, if you just click on the logo, it's like the homepage of Forex Live. Um, so even though it's called Forex, it's like all news that will move the market. So it shows you everything. But these people will post little articles, and if you get something random in the market, it doesn't show up on the news or anything like that. I always come to Forex Live to see what they've been posting because they'll tell you what's going on in a post. It usually maybe like 3 minutes after the charts moved, but it's important to find out. So when I was trading the pound yen, maybe beginning of last year or the end of the year before, I don't remember. The Japanese bank was intervening and buying a bunch of bonds. And they were doing like forex market manipulation basically, but it moved the pound yen 150 pips like instantly, and we had no idea what was going on. But we came on to here, and it told us everything that was going on. But it's important for the larger view. So it did 150 pips, pulled back the whole 150 pips, but it kept going in the same direction as the news move that the Japanese government wanted it to move in. But you wouldn't know anything about that if you didn't look first. Um, so, yeah, super important. Um, okay, and then let's see this document. So, automatic orders. So, this could be added into the scenarios as well. Um, Automatic orders are really good locations. So this really should be something that looks like under location. It's like it's tied in with the location. So larger time frame zone. So again, if you have a daily, a weekly, monthly zone that's really strong, that means that you have to have an order, a limit order at that level. That's what an automatic order is. It means that if you see that level, you have to place a limit order there. And if it breaks, it gives you information. So if the trade doesn't work, it's showing this is a an automatic order level and it's breaking. That means the buyers or the sellers, whoever breaks it, is really strong. So I should go and trade in the direction of those buyers or sellers. And then multiple time frame alignment. So this is confluence. So if you have a level that you have daily, 4 hour, 1 hour, 15 minute, so all of those time frames all have a level at the same spot, you have to have a limit order at that location. Previous strong directional day. So oftentimes this happens because of news, but if you have something that's 200 points on the S&P and it's a massive day, when price returns to that location, it'll probably give some sort of reaction again. Um, so yeah, so like this here, this was a really strong directional day. So price moved, was that 100 points in one day? But you can see in comparison to all of the candles around it, it was a massive candle. So when price gets back into this level, it'll probably have a strong reaction to the upside. And if you actually look at this level, remember last time we were talking about difference between support and resistance, supply and demand. So this right here is a rally, base rally, which is it should hold as a strong demand area. But if you look, it's also support and resistance in the same spot. So reaction, 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 reaction on the other side, and then it broke it, pulled back, and continued. So it's both in the same spot, and it's a strong directional day. So if price comes back short into here, you need to have a long from here ready to go because you could get a really big reaction back up from there. And then strong overnight move. So this is that overnight session So uh, if an overnight session it's super strong, where it started from, you need to have an order there. Um, yeah, yeah, the origination point of that move. It's as simple as that. Um, but yeah, so for all four of those things, if you get any four of those, you need to have a limit order resting, sitting there to take the trade. And then again, if it doesn't work, then you have more information and you could potentially wait for a pullback into that level to continue in that direction. Um, so yeah, that's all six of these. So again, that works into the scenarios idea, the automatic orders. So if you see any of those automatic orders on the chart, make a scenario for it and score the scenario. So all locations aren't made the same. So you have these locations, which can be strong areas and they can be automatic orders, but they don't have to be. Um, so you can have like a mental note of better locations and worse locations. So the more confidence you have, or the higher the time frame the zone, the better the location should be. So the bigger the move that you could get out of that level. Uh, and one thing on that as well that I always used to get caught up on is, let's say I have a daily level. So let me go back to the chart. So this level that we found before, this is a daily level. So you can see it strong on the daily. It's probably also weekly level. Let's see. Yeah, you have multiple weeks all coming into each other, but I like how it looks more on the daily. But if it's a higher time frame level, the reaction is going to take longer to happen. So don't expect it just to work out instantly. Um, you can get small reactions like this here. Do you see this wick? So within this day, price came up into level and rejected down. So this would have been a nice move. I can't. Okay, there you go. That's 20, 23 points, 22 points. So it's a nice rejection down, but that's not the same as this, which is, I mean, like 300 points or something down. Yeah, 300 points down. So, but it took how many days? 1, 2, 3, 4, 5, 6 days before you got that rejection. I mean, if you count this first rejection down, this was still even nice. If you had 24-point stop and it went 73 points, and then it retested again and then did the whole move. So it'll take much longer at these higher time frame areas. Um, I would always get in and expect it to go and do this big move straight away, but that's not realistic. But if you have a level that's based on the hour or 15-minute chart, you can get the move much quicker. But you shouldn't expect it to move 300 points from it. So, yeah, the main things that I would really focus on, make sure you get that scoring down, back test, do all the scenarios before you do any back testing, draw everything, and just see where you are, see how your levels work out. Try and keep track of your approximate R from your back testing. So don't do it randomly where it's just I'm back testing and it's completely random. Try and say, okay, I lost the trade here, so that's minus 1R. And then I won this trade, which was 3R. So now I'm net up 2R. And just keep like a running tally of where you are so you can see how you're doing. If you don't do that, then you won't really have an idea. Um, and then and then you can make adjustments over time. So you can say, when I do this or I don't take this trade, I finish up more R than usual. Mm-hmm. What you're saying, when you go back and you're just back testing, like I did before here? I mean, I wouldn't force trades. Like take the trades that you see. If you see a trade, just take it. If you lose on back testing, it doesn't matter at all. So just take it and see which ones work, which ones don't work. But don't have a requirement of you have to take this many trades or yeah. I have a requirement of staying under a certain amount of trades, but I don't have to take a trade any given day because then you get into the over trading and then you get all messed up. There's some days where I don't take any trades. So, oh yeah. Yep. Yeah, or what you could do um is you can so let's say I'm back. Let me go back here. So I have some levels drawn out on the chart and I have multiple levels over a big amount of space. So all of these levels probably won't hit in one day. So you can draw out the scenarios and just do it over like a week. Yeah. And then each day when you're watching the time, what you can do is you can have horizontal lines at each 9 o'clock. So I know that's an open, and then I can draw the next one. That's an open. That's an open. And then when the day finishes, just pause the back testing and readjust any levels if you need to, redo the scenarios. But like this level at the top is an area where I want to go short from. But I don't think it's going to do that in the next couple days. But no matter what, I want to short from up here. Yeah. So, and then if it breaks above, then I want to be going long from there. But I mean, from here, that's January 3rd. Let's see how many days. It's going to take ages to get up there. But the same scenario is there no matter what. That's like an automatic order. That's an extreme, a range extreme, and look how it works out. Pushes price all the way back down. So it got the first reaction on the first test, and then it went deeper and reacted further. So this was a week later. Um, but yeah, so just draw it out like that. Have all your lines everywhere. So from there up like that, back down. And another thing, just looking at this quickly, when you take a trade that's in a big range like this, and you're at a range extreme, generally the target, if you're going short, the target is the middle, and if you're going long from the bottom, so from if it comes down here and goes long, the target's the middle as well. A lot of times it'll get a reaction at the middle, and the reason for that is because it's a high volume node, because that's where most of the volume is occurring in the range. And you get a reaction. So it came down really sharply and reacted all the way back up again. You don't want to try and go for the other side of the range because what can happen is it goes like this and then finally it'll go down. But you don't know how long that's going to take for that to happen. And that stands for all time frames. If you're on the hourly or whatever, if it's a smaller range, same sort of thing. Yeah, yeah. Only if you have the proper risk to reward on the trade. So you're shooting for that 2 to 1, 3 to 1, something like that. Uh, okay, well, so next week I will be in town still. Um, does next Wednesday work for you still? Okay, perfect. But the week after, I won't be. I won't be here. I'm gonna be traveling, and then the following Wednesday I'll be here, and then the following Wednesday I'll be here. So all those dates work. Same time, 12:30. Okay. Is there anything in specific for next week that you want to go over? Okay. I'm just asking because I have more things that I can teach you, but I want to help you with what you need most urgently right now. Um, Okay. Yeah. Good. Yep. Yep. Okay. Yeah. Next week we'll check in and see how all of that's going and make sure it's going well. And then if it is, I can show you a couple more things to add on top. Yeah. I mean, if we're going too quick too, we can always delay by a week and do 2 week break in between. And instead of doing it every week, do it every other week instead. So you have a little more time to back test. It's all up to you. Okay. Yeah, yeah, of course. And just shoot me a Discord message if you want to move the time for next week. All right.